Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is working. Hope everybody's had a fantastic morning. Looking forward to trading with you guys today and going over the scanner and some of the other things that we've got going on. As always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's do this. Let's go take a look at, here, I actually have this tab pulled up with my charts. Um, we had some pretty big moves last night. One of the scanner signals, if you pull up the scanner, you can see the overall signals for the week. Two of these signals are the USD yen sell and the Euro yen sell. Those finally came in big time clutch last night. So again, these were scanner signals that were posted at the beginning of the week, um, over the weekend to, yeah, as a strong sell. These actually were more crowded market signals. Um, it had a lot to do with the long-term signal being a strong sell. Um, we don't have a sentiment reading yet on the euro yen or on the dollar yen. And the weekly shift really wasn't that significant just yet, but the long-term signal really came into play um, with these trades. And that's something I've been wanting to talk about. I did talk about it a little bit yesterday in the COT report webinar, which is when you get to crowded market stage, your focus really needs to be on that currency pair. Um, because what happens is when the markets get into a um, when you get these really big positions by the banks, okay, and they have a, like, for example, right now the euro has a really big long position, the yen is a really short position, and we the idea is like you have a rubber band, and if you stretch out that rubber band, at some point that rubber band has to come back, and it's not necessarily about the price. I don't like to play around with the price that much. What I like to play around with is, what are people doing? What are retail traders doing? What are banks doing? And when they get this really big long position, they have no choice but to kind of pull back and go the other way, right? So that's exactly what we saw with the euro yen last night and the dollar yen. So the overall signal is already pre-programmed to understand that. So when you get to crowded market stage, like a lot of these are, not every single overall signals in crowded market stage, but a lot of them are. And when you get to that point, there's a much better chance at having that move in that direction at some point during that week or even in the following week. Obviously, if we can try to confirm it with sentiment, or if we can try to confirm it with the weekly shift signal, that's even better. But it's not necessarily required to get an overall signal. So one of the questions I've been getting this week is, like with the euro yen, there's a weekly shift. Yes, it's negative, and that would support the direction of the overall of the long-term signal, but it's really not that big. It's not a huge shift. And so it's still classified as a neutral signal. We really don't have a bias as far as retail traders go just yet. Um, but it is coming, right? So I can already tell you right now it's starting to flip. It's closer to 50-50 right now. There used to be a lot more short traders. You used to be up in the 60% area. Now that's down to 54. So this I can see is transitioning. Nonetheless, it's still the sentiment signal is still not there yet on the euro yen, but nonetheless, like I was saying, um, the scanner's already pre-programmed to give you an overall signal um, that will prevail against the other metrics so long as the crowded market indicator lights up. And that's exactly what's been happening. So like I said, I actually posted this. I think I posted this at the beginning of the week. Let me see if I can find my post. Just saying here, these are the top trades that I'm focusing on for the week. Um, um, let's see. I'm trying to find where that is. Um, Actually, I don't know if did I post that on the Euro Yen? I'm kind of surprised. Oh, maybe it's because okay, it's possible at the start of the week. Okay, that's a good point. It's possible that I didn't post the Euro Yen at the start of the week because the sentiment didn't give it that strong sell. It was a sell at least, but it wasn't a strong sell until now. I know for a fact that as of last night, it was a strong sell. Um, I think it was just a sell signal on Monday, maybe Tuesday, and that's because sentiment was actually still a buy rating on the Euro Yen. I'd have to go back and look, but I'm not okay. I got my story straight. Yeah, so that's what happened because I'm noticing here I did not post it at the start of the week. Um, but it did become a strong sell. And I know for a fact that at least as of last night, the Euro Yen was a strong sell. So I do think it's a good idea, guys, to come in here and look for these signals during the week. Most of these are going to be the same signals at the start of the week. Um, like the Euro Kiwi strong sell, that's always been the same. Nothing's changed there. Let's see what else? The Euro Franc is still a strong sell.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
The USD franc is strong, so that has not changed. USD CAD still same thing. Kiwi dollar buy is also strong buy. So like I was saying, but during the week, sometimes you can get additions here. Or you can have a sell become a strong sell. You could have a strong sell become just a sell, right? That can transition throughout the week. So pay attention to that because it can adjust. And the only reason why it would adjust is because of sentiment. There's no other metric in here that would cause the scanner to create a new signal throughout the week except for sentiment. So do pay attention to that. That is an important detail that will help you take better trades. Um, but yeah, like I said, so anyway, Euro yen sell last night, USD yen sell last night. Both were really, really good. Roger says the Euro yen short was sweet overnight. Yeah, definitely. 100%. That it just fell off a cliff. Absolute cliff last night. Um, and I will tell you this, even if it wasn't a strong sell at the start of the week and it became a strong sell during the week at some point, I will tell you this, it has always been a crowded market signal as of the start of the week. That's not possible to change during the middle of the week. It's impossible to have a crowded market signal change. These right here, basically what's fixed on on the scanner. So the weekly caught signal from the shift data, that's fixed, can't change. Long-term signal can't change during the week. Could change on the weekend, but it's not going to change during the week. Crowded market signal can't change during the week. So these three things right here could change, right? So the amount long, the amount short, that changes on the fly, and can change significantly depending on, what the market does. The sentiment signal that can change throughout the week. And so subsequently, the overall signal has the potential to change because of sentiment, but it's usually not going to change a lot of things up by the end of the week. Most of the trades that you have at the start of the week will probably be the same trades you have by the end of the week. So just want to make sure that that's clear. Since we've had some pretty big moves this week, that's why you're seeing sentiment start to light up a couple of currency pairs, um, and give us some pretty significant signals. Um, but yeah, so like I was telling you guys, I've set up the scanner in such a way so that when the long-term signal becomes crowded market, that has to be the focus point. That has to be your focus signal because it becomes so much more powerful. It's a flood of, think of it this way, all of this pumped up uh, profit taking by the big banks is now happening, and it's going to happen over the course of a week, 2 weeks, 3 weeks, maybe 4 weeks max. And it has to happen. And so when that happens, you get these very violent moves in the market, just like you're seeing right here on the euro yen, just like you're seeing on the dollar yen to the downside. These are down. This is down 2% today, guys. I don't know if you recognize, if you're new to trading, but a 2% move in the Forex market is absolutely astronomical. Like it's unreal, the level of movement when you have a 2% move. Um, um, yeah, pound yen also down 2%. Just crazy, crazy stuff right now. Okay, so what are some other things I wanted to show you guys? So, oh, and then like I said, last week the euro franc from last week down a ton, and that's a crowded market signal. It still is a crowded market signal. So I'm trying to find good places to get in on our sell for the euro franc. I still have that sell. I posted this yesterday with you guys, um, on the euro franc, or was it the dollar franc? Oh yeah, it was the dollar franc. Um, so I'm still trying to get in to a good spot here. It looks like it came up into this demand right here, or this supply. It looks like it's holding strong with that supply. I'm still trying to get the market to come up into this one. If I can get it, if I can, yeah. Oh yeah. So Lee says, I think we had a pending order activate this morning. Yeah. So we do have, a order right here in this supply area right here. It looks like that one's holding strong so far. Um, if that one loses, my next area is right up here. So you should have at least this pending order up here ready to go. That supply I'm trying to get, um, like if the market wants to go up more, that should be a pretty solid supply zone. We should get a really nice pullback from that area up there. Okay. Okay, let's see. What else did I want to show you guys? Um, so that's good. We don't really need to make any adjustments here because all that's set up. Um, and then the Euro franc's looking good too. This one, I do want to see if there's like it's right now, it's just in this supply area. So hopefully this pulls back from that zone. If it doesn't, I'm trying to figure out where's the next most logical area for this to pull back. So let's pull up the order block indicators. Let's see if we can find a logical place for this to push even lower. Okay, 15-minute doesn't have a lot of order blocks. Let's try an hourly. Yeah, hourly, most of it's just right here. That's kind of what you would expect on the Euro franc. There is a zone up here that might be worth placing a pending order sell right up there. We might end up doing that. But like I said, this is, the banks are doing whatever they can to get out of this trade. So anytime, again, anytime the euro franc goes up, the banks are going to be selling into that. They're going to use that price to get out of the bad trade that they're in, and they're going to try to sell it even lower. So and again, the scanner is already telling you that that's exactly what's going on right here. You got definitely at crowded market stage, something to be aware of. Um, Same thing with the USD franc, Euro Kiwi, yeah, all of this. Anytime these pop up, except for the Kiwi dollar, all of these strong sells, if they pop up, we're trying to send it right back down. Let's see, the New Zealand dollar is doing well right now. We did have my one of the trades, one of the price action trades I took did stop out at break even. Um, I had a break even entry. I can't remember exactly where, but it was somewhere in here. Closed at break even. Um, but it's on its way back up. And again, that is the signal for the week is to buy this right now. Okay, I want to show you guys one of the things. So I talked about this yesterday. One of my risk management techniques. If you guys are interested in learning about it, um, it came in really clutch this morning. I have one of my prop firm accounts is doing really, really well, taking these weekly signals, and man, it's super awesome. So let me show you kind of what I do. Like right now, let me give you an example. Like this is actually one of the main examples is on the Kiwi dollar. Let me actually remove a lot of this stuff. Let's make this chart cleaner. So I can show you what I'm doing and how I recover these trades. So when I get to a crowded market stage, on a currency pair, I have a greater level of confidence in the long-term direction. Okay, so I believe um um so so like I said, when I get a long-term signal that strong says strong seller, strong buy, that will only happen when you're at crowded market stage. So there's a little secret, little intel for you to be aware of. So we give this a little bit more value when that happens. Okay. Now, something to be aware of too, I've put checks and balances on this. So, if we get into a long-term signal, but the sentiment is still a buy on a strong sell, for example, I've set this up to have a little bit of a check and balance so you don't get so aggressive into that trade. Okay. So but once sentiment gives the green light on the crowded market signal, then you know, okay, this is definitely a solid trade. Okay, so you have that with the euro franc right now. You have that with the dollar franc. You have that green light. That green light is going to come soon on the euro yen. Um, the only reason why there's no red light here is because the weekly shift does not necessarily, well, it doesn't necessarily, it just doesn't disagree with the long-term signal. And so that's why we've let that one kind of slip through as a overall strong sell. However, at the beginning of the week, like I said, that was just a sell signal. And I think it was because there was still a buy signal on the sentiment. So again, that is designed to put like a little check and balance on there just to say, hey, let's protect. Um, we'll give the long-term signal a lot of power, but unless sentiment starts to come up and agree with that long-term signal, we really don't want to get too aggressive or too crazy about that trade. But I still want it to be very clear that when we get to crowded market stage, there is a heightened level of confidence I have with these trades. So one of the things I started doing, and I taught this last night, one of the things that I do to recover trades, and I do this in a few of my accounts, and it works really, really well, at least for me, the way it works. So what a lot of retail traders do is when a trade goes against them, here, let's just kind of draw this out. Let's go to this white space. I'm going to draw out an example. What a lot of retail traders do is as the market goes down, let's say they want to buy. Anytime this goes down, they just buy a little bit more. Let's say they buy right here, and the market goes down a little bit more, and then they buy more just as it continues down. I used to trade this way for about 3 or 4, 5 years, and it was agonizing because I would blow accounts doing this exact type of style. You might even call this like a grid system. So this would come down, and then the retail trader would just continue to buy more. And by the time you get down to like, your fourth or fifth trade down here, your drawdown is usually pretty significant, and you're getting yourself into a lot of trouble as this thing continues lower. So I've blown accounts, I've blown prop from accounts doing this very thing, and I regret that I've done that. But I think a lot of traders are guilty of this. If you're not guilty of this, then good on you, good for you, because a lot of traders are guilty of this. And the very fact that sentiment is a thing, the fact that was um 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 the very fact that we have sentiment, the very fact that sentiment even works is because traders do this. All right. Okay, so now here's what I want to explain. So this is how a lot of traders lose. Now, if I have a heightened level of confidence with a swing trade, like on the New Zealand dollar buy or the euro yen sell, the USD yen sell, if I have a heightened level of confidence and my trade goes against me, I don't want to just stop out of my trade because I have confidence that I'm going in the right direction, even if in the short term it's going in the wrong direction. So what a lot of traders do, like I said, is they might have that kind of bias that I have, but this is how they approach it, is they have this heightened level of confidence, so they just double down, triple down, quadruple down into the position like this. Now, what I do, and this honestly works like a charm. So, um, it, it's worked very, very well for me doing this, and I've done this on a lot of swing trades. So I actually don't use a stop loss on this, and or I do have one, but it's just not a relevant stop loss. It's not something that you're trying to keep your RR tight type of thing. And so a lot of people get a little bit nervous about this type of thing, and you should. You should. So when you look at this type of style, um, please just for now give it a grain of salt. If you want to explore it more, I'd be more than happy to coach you on this and help you do this successfully, because you can make a lot of money doing this. But please just follow me along. And before you start doing it in a prop firm account or a live account, uh, do it in a demo many times over, get the hang of what you're doing, and I'll help you tweak it. And then you can go ahead and do this as well. But basically, you have to have an edge. You have to have something that gives you that heightened level of confidence in your trade, like the crowded market indicator. And so I'll go in on a crowded market signal, and what I'll do is I'll say, okay, I'm going to put in a buy, and let's say, this is the Kiwi dollar, and I'm buying the Kiwi dollar this week. Okay, so I'll put in a buy. It immediately goes against me. Let's say, but it goes against me. Instead of adding to the position each night, I don't add like the retail trader. Like I don't come in here and just say, I'm going to buy again because I have a heightened level of confidence. What I'll end up doing is I'll actually place a pending order buy stop above the market price. So I'm not going to actually get into the trade. I'm not going to add to the trade. I'm only going to add if the market shows me that it wants to go that direction. Okay. So what I might do is I'll put in a point one. Let's say I'll do a smaller contract on a bigger account, a 0.1 buy. Okay. This is just at market to start the week. And then I'll put in another point one or 0.1 contract. Now, this is a buy stop. So this has not triggered yet. This is just here. And if the market continues lower, I'm only in one trade. I'm still not in a second trade. Now, if I come to the next night, what I'll end up doing is I'll actually move this buy stop, and I usually put this about a half an average daily range above the current price at the time that I set this up. So I usually do this right before I go to bed at like 10:30 or 10 o'clock at night. I'll come in here and I will just readjust that buy stop if it hasn't triggered yet, and I'll put it a half an average daily range above the current price. That way, now if the market decides to come up, now I get in to this trade. Um, and if the market continues up from there, I can recover that way. That's a pretty simple way to recover without getting too deep into the trade, because by this point, a lot of traders would have already added 5, 6, 7, 8 buy trades along the way down, but you're only waiting for confirmation before you actually go and do this. Now, let's say you get triggered in and this thing continues. You just got triggered in, whipped into the trade, and it continues lower. Again, you'll come into the next night. Now you got two trades that are down, but you're not going to just add another market buy. What you're going to do is same thing, just a half an average daily range above the current price. You put in another buy. Um, let's do a point 0.1 contract, and you can mess with this if you want to. I've done that a few times, but I'll just keep it generic, or a, let me adjust this 0.1 contract and just keep it there. Let's say the market just does its thing. It just kind of goes sideways. That's fine. Does nothing. You're still just sitting in this trade. A lot of traders would be super annoyed at this point. But then the next night, you're like, okay, no adjustment needed. I'm just going to leave that trade there. And then finally, this market just breaks up big time. What's nice is you have two trades now down here that waited for confirmation rather than just getting in right away. So your drawdown was actually very, very tight generally. My drawdowns actually don't get very big with this style. And the idea is when this thing breaks up, you'll have more trades at the bottom when confirmation comes into play, but only when it comes into play. It's not like you're going to just add incessantly on the way down like most retail traders do. You're only going to get in and scale into the trade as it goes in your favor. That's the key difference that a lot of traders don't consider. And so you can actually recoup these trades. You don't even necessarily need to get back to your original. You don't even necessarily need to get back to here. A lot of the times, by the time you get to here, midway up or even a third of the way up, you're already profitable on this trade. Um, but that's only possible because you waited for confirmation to get in. Um, right? So that's one of the ways I've done this. Another way you can do this, and this is a little bit riskier, but I've done this way, and as long as you have that heightened level of confidence and you wait for that confirmation, what you could do is, and I've done this before, is you could make your second trade a buy stop at point 0.2, and then your third trade a point 0.3. So you're just gradually scaling in. And what this ends up doing is when you finally get your move in your favor, um, you're only scaling in as it confirms, and then as it confirms, you subsequently have bigger trades, and so now that recovers with the bigger trade at the bottom. Okay, now let's say it could do something like this and continue lower. This is totally possible. Like you can just continue to work this, but again, let's say it goes down again. What you're going to do down here is um, don't add to it. Don't add to it as it comes down. As long as your signal still says it's a crowded market, as long as you still have a crowded market signal, um, you can go ahead and continue to stay in this position. But if this continues lower, you're not allowed to add. You're only allowed to add when and if the market moves in your favor. So let's say you get to a fourth night here and you set this up, you can do a 0.4. So you're just adding 1 micro each time. So you could do this way, or you could just do a fixed lot size. That's fine. And then you do a buy stop. And this goes right here. And now, if the market finally makes its big move, what's cool is you didn't add to this position as it came down. You added as it went up in both scenarios. So again, you have your initial buy position, and then let's say the market's unfortunate, it goes against you. You don't add, but if it goes in your favor, you add. Again, same thing. If it goes against you again, you just wait. You reset another buy stop ready to go. If it goes in your favor, you add. If that doesn't work, you wait. And then if you get that final big leg in your favor, this is where you recover everything. And it can happen just like in a night. Everything just goes in the right direction. Um, I actually do this same concept. I did this with the euro yen last night and the dollar yen, but I didn't need to recover. So what I ended up doing is I just had a grid of sell stops all the way down. So I just had a bunch of sell stops. So instead of just taking one generic trade, since I know that the banks are crowded and they have to get rid of dollar yens and they have to get rid of euro yens, I know that. So I had um, like a bunch of sell stops ready to go. I'll explain what that looks like too. So basically, so this is why I have to put a big disclaimer on this. So Wes and Lee, this does not actually utilize a stop loss because the lot size is usually pretty small to begin with, and you have an idea of how far the market would move. I mean, it does have a stop loss, but it's not like I mean, it's like super far away. It's not like a relevant. You're kind of on your own here, and you're trusting your system, you're trusting your edge to give you this um, return. Okay. Um, Now that might sound crazy. This is like, wow, I thought we always use a stop loss, and we do. We definitely do. I won't post trades without a stop loss. I'm just showing you a way that I've used this technique to make quite a bit of money, both in stocks and in forex trading. Um, but you have to have an edge where the banks pretty much will have to give you this type of move at some point, which we have with the crowded market indicator. Okay. And then the other thing that makes this work is you're not adding on the way down. You're only adding on the way up. That's what makes this thing tick. Okay. So very important to understand that. Now, let me show you how I do this with, okay. And then Lee says, what if it goes in your direction right away? Do you add buy stops below the current prices? Yes. Yeah, so that's where we're going next with this. So that's how you recover the bad trade. That's how you can recover without a big drawdown. Now, I mean, you can have a big drawdown. It's possible. I've had that. Well, I've never had a huge drawdown. I've had decent drawdowns where I'm like, I'd like this to turn around sooner, right? But let's look at the example with the euro yen. Let's actually pull up the euro yen so I can show you how I do this when it just straight goes in your favor. So you don't want to just recover. Sometimes it's all about maximizing profits. So I do the same thing over here. So when I have a heightened level of confidence, like with this one, the banks are paying us big time. So we know that the banks have to sell this off. We knew this weeks ago, and it's been happening, and it's happening again. Here we are a day later. This market didn't do much during this week, and it finally just fell off a cliff. How do you maximize your profits when you know the market's going to fall off the cliff at some point? This is how I do it. So instead of just taking one trade, which I do, obviously we have trades like that where it's just a single order entry. One of the things you can do is you can actually scale into this. So that's what I did last night on a couple of my accounts is you have your initial weekly entry right there because you know you're supposed to sell. And let's just say that's, just a zero point 0.1 contract or whatever you choose to use for your account. And that's a sell. Okay. Then what you do is you just have fixed contracts on the way down. So a half an average daily range your way, let's say that's right here. You have another sell ready to go. And you do a 0.1 contract sell stop. So this is just if everything just goes sweet in your favor, there's no recovery needed. You're just making money. Okay. And you same thing again, 0.1 sell stop. So you're adding to this as it's sinking in your favor. Okay. So this is another 0.1 sell stop. And like that. So I think I had like 3 or 4 of these trip in last night. So these are areas a lot of retail traders aren't thinking about putting trades, but you have trades ready to go nonetheless. So you're ready to milk this thing if indeed the banks get their way with this, like they did last night. And as this thing comes down, you've got this trade that's up the most, this trade that's up the second most, the third most, fourth most, and so on. And as that thing just goes in your favor, you're scaling into it at a fixed rate. Okay. This is actually a great way to do it, but you have to keep your lot size small to be able to do something like this, especially on a prop firm account. For reference, what I've been doing is um, what I've been doing is for every $100,000 that I trade, my starting position is a 0.03 contract. So that's just a micro. So I'll just take a micro contract and then every, every half an average daily range away, I have another sell stop or another sell stop and I've done it that way. There's a myriad of ways you can do this. You don't have to do it just that way. In fact, you don't even need to do this, but I think it's nice because if you can get a trade like this, um, where everything just goes right, like this one, um, you're pretty much going to make money that week. And what's cool is this trade alone can cover any losses that you have on other trade setups. So one of the trades I'm down on right now is one of the strong sells or strong, yeah, one is the USD CAD. This is one of the trades I'm down on right now, but let me show you how I manage this. So if you pull up the USD CAD, this is a trade, like I said, from the start of the week, I had a sell signal. So I did take a sell here. Let's just say that let's just say that's a 0.01 like we've been doing in our example. Let's say you take a sell here and it's a 0.1 sell and it's just a market at the beginning of the week. Okay. Then what you do is you're not adding to the position as it goes up like most retail traders do. That's not what you're doing. What you're doing is you're saying, okay, if and when this market pulls back an average daily range, then I'll get tripped in. So I'll readjust this once a day. So once a day, I'll go find out what an average daily range is. And, I'll take a half of that. I don't know what it is on the USD CAD. Let's just say it's like 50 pips or something. Um, so um, I don't know. Let's say I don't know where last night was, but let's see, last night was somewhere right here. So let's say last night, 50, let's see, how far away is 50 pips? 50 pips from last night. So this is where the market was. 50 pips away would be like down here. Okay, so right here, you would have a sell stop ready to go. And if the market pulls back. So you'll put in a sell stop, and I like to increase it just a little bit. Like I'll do a um, let's just do a sell stop and we'll just call this a 0.2. Um, but the thing is, this trade hasn't tripped in. So currently I'm down on this original guy and it's not fun because he's down. The original trade is down, whatever. How many pips is this? This is, 80 pips right now. I'd be down on the original trade. But the second trade, he's not even in yet. So you're just letting this really small trade kind of go against you. And you're not increasing the stakes so long as the market is not budging. If it's not going to budge in your favor, um, um, if it doesn't budge in your favor, you don't do anything with it. Okay. Because you're going to let other trades like the euro yen do all the dirty work for you. You're going to let the USD yen, the euro yen, those other really good trades on the week, those are the ones that are going to make your money. Okay. Those are the ones where you're going to, you're going to sit really good by the end of the week. Okay. So if this USD CAD does not pull back, then you're just not going to get in. Plain and simple. You're just not going to fight this. Okay. You'll just close it by the end of the week, without a profit. You might actually lose on this original trade. Um, and then you'll just come back the next week and reset again. Now, if this market does pull back, um, we actually still won't even do anything until it comes the half an average daily range or whatever that is. It could be less than this. I don't know. It might even be closer to like 30 pips. I could be wrong. Maybe we can check. Let's actually check real quick. So USD CAD is 71 pips. So half of that's about 35 or 36. So 35 pips from last night, from where the market was last night, would be puts you, yeah, about right here. So this is actually where it should have been. So unless this market comes down far enough to trip us into that trade, we're not going to tango with it. That's the beauty of what this risk management technique is. Unless the market comes in your favor, you're not going to try to battle this. In fact, it could just keep going up. And the thing is, yes, you would be down on that original trade, but that original trade is a lot smaller. Meanwhile, you have all the other ones that the other signals that are actually working out in your favor, like the dollar yen, like the euro yen, and you've subsequently scaled into those as this thing's gone in your favor. Do you see what we're doing? So you don't fight the loser and you milk the winner. Okay, that's the concept. Don't fight the loser, milk the winner. Okay, that's exactly, yeah, I think that's probably the best way to put it. That's exactly what we're trying to do with this. So you don't even need a complete flush. This scanner is already powerful enough to give you some really dang good signals on the week. But some of these are going to be blunders. Like I said, you look at that USD CAD, it's a strong sell. Where's it gone? Not in sell. It hasn't gone in the selling direction, right? So some of these are not going to be, again, nothing's 100%. But this is how you can make a winning week out of some of these are going to be exactly spot on, like dollar yen sell, euro yen sell, spot on signal. Okay. No doubt about it there. So, um, but like I was saying, but the USD CAD, not exactly what you would expect. I mean, I think that's the worst trade on here. So I picked the worst example. But I'm picking the worst examples so you can see that the worst point you would be with this is you'd have your original trade at the beginning of the week down, but you're not fighting this guy. It's possible you maybe got into a second trade right in here. Maybe you have a second order right in here that's down at the moment. Um, and uh, but that's after it kind of went in your favor a little bit. And again, you're not going to get back in. Let's say you have another sell entry ready to go. Um, yeah, let's say this one entered as a sell right there a few days ago, and then let's say you set up another one last night. This one is another sell stop, but you're not in it. You're only going to get in it if this market breaks in your favor. So let's say that's a 0.3 sell stop. So again, if it goes in, great. If it doesn't, um, then you just let it continue to go against you with these smaller positions. But you're not going to get into a big position until it actually moves in your favor. So that's what keeps the drawdown tighter, doing it this way. Because like I said, what a lot of traders do is they just continue to fight the trend. And this is what most guys do. Let's delete this. They'll start selling right here. The next night they'll add another sell, they increase the stakes, but they just do it at market, just sell again, and then they're just super frustrated. I was this guy too, right? They're just super frustrated because they've been scaling into this strong sell from the scanner, and it's like it hasn't gone in that direction just yet. I mean, it still could, but at the moment it has not. So this is how you blow. This is the recipe of how you blow an account. In fact, we could literally do a demonstration on how you blow an account like this, because that's literally how you do it. But if you want to protect your capital, you can protect it by only adding into positions that have actually gone in your favor. And that's the technique I just showed you guys. Let's look at this. So Wes says, though, if I understand correctly, you would enter each strong sell or strong buy at the beginning of the week with a very small amount, then manage them throughout the week. Yeah, that's exactly right. Yeah. Now, so I'd say if you're jazzed about this, if you want to give it a go, definitely do it, but do it on a demo for a while. You need to get some practice, because it's a great little technique. Um, it's a great little technique. You can put, if you feel more comfortable putting a hard stop on it, I think you can definitely do that. I do put a stop loss on every trade. Um, but some of the stop losses are kind of irrelevant. Like I was telling you, like I have a couple of prop firms that won't let me take a trade unless it has a stop loss. But the stop loss I'm using is, like I said, it's just so far out. It's not really useful. And the reason why I'm okay with that is because the way I manage risk is so effective. I find it more useful than the stop loss itself. But you really do need to get this technique put together, and you need to kind of get some experience. But the whole idea, guys, and let's kind of come out here again, is let's say you take a trade and you're selling. The whole idea is like if a trade goes against you immediately and you sold down here, the idea is when this thing starts to come in your favor, most of the trades will be entered into at the top of the market as it starts to go in your favor. So you'll get, one losing trade down here, but then you'll get a series of winners on the way down type of thing, right? And so most of these winners will be added at the top, not not on the way up, which is what retail traders do. You'll be scaling in on the way down. And that's how you can recover a bad trade successfully and do so with minimal drawdown. Okay. So something to be aware of as you're doing that. Um, I do often just, oh, and actually real quick, I will put stop losses that are a little bit tighter on some of the trades that get entered into up here. So as the market starts to come down, I am starting to scale in. And so if these things start to go against me, which doesn't happen very often, but if these were to go back up after I've scaled into those trades, I might actually stop out on those ones at the previous high, just because at that point you've scaled into a bigger position and you don't want to let that right against you if indeed that happens. Doesn't happen very often, but if it does, you might want to actually get out of those. The thing is, when you just have a singular order down here that's only down, well, that's down a lot of pips, but it's down a small dollar amount, I'm not really worried about this trade. Um, it's it's more about getting these trades at these higher prices when it starts to crack in your favor. And that's where you're going to make your money. So in case these trades do go against me, these ones up here, I might actually put a stop loss that's a little bit tighter on these, just because um, these ones could do some damage to your account if in fact you were wrong. Again, it doesn't happen as often. Usually where people get burned is adding against the momentum. What we're doing is we're adding with the momentum as it starts to build back in your favor, right? So that's anyways something to we'll talk about how to do that. I'm wondering if we should do a class on that and actually take some trades together and show you how to manage that.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members of my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member. And I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
But that's what I've done this week with the New Zealand dollar. So if you look at the New Zealand dollar, this has been one of my more profitable trades this week, even though it's actually technically down from the start of the week. This is the start of the week right here in this yellow area, but this is one of my more profitable trades. So what I ended up doing is I had an entry right up here. I had a 0.1, we'll call it. I'm not exactly sure what it was, but we'll just start a small initial entry, 0.1. This was a buy order. Obviously not good, right? Didn't go in my direction right away. Now, this thing just pretty much went down quickly. Then what I had was down here, I had a couple of entries to buy, and it was a half an average daily range above this market. So that's about 27 pips, we'll call it. So 27 pips from this bottom. So I had a buy right here. And then that one was a 0.02, 02, buy stop. And then last night, this actually came down again. So I did this yet again. Now I did another buy stop down here, somewhere around here, I believe it was. And this was another buy stop. So I'm only adding if it goes in my favor, and that's a 0.03. So I just add another, I don't double it. I just add it a little bit more if it goes in my favor. So now what I have is I have this initial trade that went against me. And then I have these two other trades with bigger contracts that got added into only when the market started to break into my favor. And that's how you can turn a losing week into a winning week if you do this. But what's nice is I didn't add on the way down. I did not scale into I did not experience this massive drawdown. I didn't experience it because I didn't add on the way down. I only added when it started to break in my favor, right? And I subsequently got into bigger positions as it broke in my favor. And so you can actually, you don't even need that big of a move to recover this guy right here. You really don't need that big of a move. Now I'm going to leave these open. I suspect we might see this even break higher by the end of the week. We shall see. Um, but again, if this comes down, I don't add on the way down. It's only when it curves and curls back to the upside is when you get back in. Okay, so that's how you can kind of keep the drawdown tight on those types of trades. And then other trades like the euro yen, those ones just go straight in your favor, or the dollar yen, like this one. When these go straight in your favor, you do want to have multiple entries ready to go. So you have your initial entry from the start of the week. In this example, start of the week to sell there. And then half an average daily range below that, you have another sell, half an average daily range below that, another sell below that. And that's, again, you're milking the winners and you're being patient with the losers and only add into the losers if they decide to come back in your favor. If they do not decide to come back in your favor, you do not tango with that market. Okay, so that's the way you're going to make this work really, really well. Anyway, just a great way to do this, guys. So that if you want to do that, that's great. I may not talk about this every single day just because it's a technique that could confuse a lot of people. If you'd like to reach out to me, or if you'd like me to talk about it in a different webinar, I'd be more than happy to teach you guys how to do this because it is a very powerful technique. I still do not want to discount or undercut the value of just simply taking these signals at the beginning of the week, or even just simply taking a trade every single day in the direction of the overall signal. Okay, the scanner is built to give you simple, easy to follow, just here's your trades for the week, or even for the, if you take a daily trade, just every day you reset the overall signals. There's nothing wrong with doing that either. Or like I said, just holding overall signal from the start of the week to the end of the week. Nothing wrong with that. So, all right, guys. Cool. So we talked about that. My game plan between now and tomorrow is so these guys are pretty much done. I mean, they may continue lower, the USD yen and Euro yen, but my game plan with the Euro franc and the dollar franc. Um, what I'm looking to see is if this area holds. So you better believe I've got sell stops ready to go on this Euro franc, right? Like I'm ready to go if this thing pulls back. I don't want to really add on the way up too aggressively on the Euro franc. My game plan is I do have a trade right in here. If that trade fails, we'll move on to the next supply area, which is right here. This is the next supply area, this little purple area. That's where we're going next. Okay. And if we can get an entry up there, that'll be great. And again, we'll be looking for, if it goes up to there, we'll be looking for entries to sell on the way down on the Euro franc. Okay. So I wouldn't try to fight a lot of these trades if they go against you for a time, because that's just going to happen. It's just the nature of the market. I would try to really get into them as they go in your favor. But this is one that I am focusing on still for the rest of the week. Um, we will find out if this breaks higher. I kind of have a feeling that we are going to break to this next zone. So don't be surprised if it does go up a little bit by the end of the week. My game plan is still to sell this into next week. I'm sure it will still be one of the top signals to sell. So just be ready for that. And same thing with the dollar franc. That's another one of my plans is to continue to sell the dollar franc. This one actually is holding this zone. So let's see if it actually finishes the job, finishes the deed right here. If not, this will be our next area up here. So this will be our next zone right up in here. All right, guys. Well, have a fantastic rest of your day. Appreciate your attendance today. Thank you for coming, and we'll see you guys in the next webinar.